Calculating your mortgage payment. Making sure that you can afford your monthly mortgage payment is critical to the overall affordability of your home. Let's take a look at some of the different components of your payment that can affect how much you pay on a monthly basis. The largest portion of your payment is going to be to principal and interest, but also included in that amount can be property insurance, taxes, as well as PMI, or private mortgage insurance. All of these can dramatically increase our monthly payment amounts if we're not careful. So let's take a look at each of these to make sure we're on the right track. Principal and interest is the largest part of your payment. This is the amount that actually goes to pay back the original principal plus interest on the loan. Insurance, our homeowner's insurance, is there to insure the house if something were to happen. For instance, if the house burns down, this will help you rebuild it to its original status. This protects you as well as the lender. And this is usually escrowed with your monthly payment. And what that means is that it's collected each month with your original payment, and then the lender actually pays it for you when it's due. This way they can ensure that there's always insurance on the house. The amounts can vary based on your different factors of the home, so be sure and get a quote before you get far into the process. We want to make sure we do a little bit of work here to avoid any surprises down the road. Taxes can also be included in your payment. These are property taxes on the property. These are also usually escrowed with your monthly payment to ensure that they're paid in full. Tax information is usually provided. If not, you can easily find it or ask your realtor for some assistance. Private mortgage insurance is an additional payment due if you borrow more than 80% of the loan on the house. This is often referred to as PMI. This is to offset the increased risk of the lender by lending so much money on the value of the property of the house. It is important that we find out how much this will cost because this can dramatically increase the amount we pay. One of the things not included in your cost but should be examined are utility bills. Based on the size of your home or the age, it can dramatically increase the amount of cost you have to incur on a monthly basis. So be sure and get an estimate before we get too far into it. This can affect the overall affordability of the home. Be sure and get an accurate number for all parts of your home payment. A little bit of planning at this stage can avoid big surprises down the road. We want to make sure that home buying fits into our budget.